I'm speaking today to Gil Gadot, one of the three co-founders of Fundtech, a global company that's headquartered in New Jersey, in the U.S. Went public in 1998, 900 clients, and focuses in the areas of global payments, high-value payments, and global cash management. Gil, give us a sense of how is your business doing today, and given the fact that most of your business comes from the banking industry.
Yeah, actually, maybe surprisingly, we are maybe busier than ever those days. And even though banks are hurting, the transaction banking business, which is exactly what we sell into, is keeping very busy. We sell software to the transaction banking side of the bank. And that area in the bank's actually doing relatively well, even very well. And it's becoming to be the revised focus for the banks where they're going to spend their money in. We sell system in the areas of payments and cash management, which are now two hot areas for the bank. So can't complain.
What are you selling into? What are the banks trying to do in the services that they provide to the corporates? And where's the money in banking today, from your perspective?
We see banks making, what's quote from a banker, tons of money with their cash management today. Corporate cash management, primarily coming from the SMEs, but also from other corporate sizes. So that's one area. And also on payments. Basically, it's fees and interest, going back to basics.
I'm sure that the competition in that space among the banks, and I'm sure with your competitors as well, is intense already. So how is it drilling down? What are the specific tactical opportunities there are?
On the cash management side, we sell a software called Global Cash Plus, which is a cash management software that allows banks to provide cash management to their corporates globally in many different countries, can run from one location. And the idea here is that the banks wants to instantiate their services to the corporates and to enable them to transact over the net, over the internet. And cash management does that. And it connects to our back-end system, which offer the banks payment systems, payment solution to allow banks to clear the payments globally, any type of payment. So that's our payment engine called Global Pay Plus. And the two, of course, Handshake.
Both banks and corporates in this environment will have issues relating to their own liquidity management. What are some of the questions the banks are asking you?
Yeah, basically, what banks are asking, and in a way it's coming from the corporates, is to find this hidden liquidity. And they want to make something out of nothing. And the hidden liquidity exists where it's embedded within the process. So if you go to financial supply chain, the ability to do things faster, more automatically, bring in the DSOs, create liquidity that can become to be available for the corporates to use. That's on one side. On the other side, the ability to do corporate liquidity management, to do cash pooling, allows you to bring in more money that can be visible and can be used more timely. So we see actually our hot seller right nowadays is the corporate liquidity management, the ability to do cash pooling or notional pooling. So without even moving the money, not only within your own bank, but with multiple banks and also cross-border. And that's been like a major shift in demand in the last 6 months.
What are you selling into in terms of just the volumes that you're seeing? Is there a decrease in volumes? Is there a decrease in value of volumes? Is there an increase in risks? Is there an increase in counterparty risks, for example, or in correspondent banking?
The way we actually see increase in volume, but that's the reason is because of the consolidation and the convergence of high value and low value payments. What banks are asking us to do is run also my mass payments, my low value payments on your high value payment system. Because of technology, we just benchmarked 10 million payments an hour just a month back. And with the ability to process so many payments in 1 hour, there's no reason why you can run all your payments on one engine. So we do see increase in volumes, but it might be because banks are clearing more type of payment, consolidating and converging this type of payments. So that's from one hand. I would believe that there is some, and we get actually signals from the bank, they want to increase the risk management with sending payments. So we have a global payment engine allows the banks to manage their liquidity globally and to control their payments. And we're adding now a level of the risk management level. So for example, the day Lehman went under, they could implement a rule that stopped all the payments on the spot. So basically making sure that all our banks are clear and not at risk to send money that will not be repeated or sent back to them on the other side.